Well, don't let today's flat performance in the S&P 500 fool you. We actually did have a couple of exciting events. First of all, the Russell 2000, which tracks the small cap stocks in the United States, hit yet another all-time high. That was after yesterday's all-time high. It separated itself from the other indices in the United States yet again here today by going up while the rest were down. Not only that, but we also had U.S. 10-year Treasury yields hit a new multi-year high going all the way back to 2011. So today's trade application, we're actually going to focus on an industrial giant that had a nice little bounce pattern here today. So let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It is May 17th, 2018. If you're new to these videos, first of all, welcome aboard. Secondly, make sure you click the subscribe button there on YouTube if you want to be alerted whenever David and I post new videos here for the Market Outlook. You're also welcome to give us a thumbs up if you appreciate these videos and leave us some comments, as well as signing up for our email distribution list within the description area, which will also entitle you to receive the overbought and oversold clusters within the S&P 500. Now, in addition to YouTube, we're also big users of Twitter. My handle is @BrandonVanZee, all one word. And as I've been mentioning all week, if you guys give me at least 100 likes on these videos, I'll come back the following day to produce the video yet again. You guys have done a fantastic job with that. Last I checked with yesterday's video, it was up to about 190 likes or so. So clearly over that 100 like hurdle that I'm shooting for there. So thank you to everyone who's going out of your way to do that. Again, I'll do the same thing tomorrow. As long as I've got 100 likes by tomorrow's market close, I will plan on doing the video on Friday as well. Now, in addition to Twitter, we also have a presence on Facebook. Feel free to check out that web address on the screen in front of you there if you'd like to join our group, which now has over 1,000 folks in there. So with that, let's go ahead and do some analysis on the markets here. As you can see, I've got the S&P 500 pulled up in front of us. And as mentioned before, we finished flat on the day. We were down 0.09%, so about as flat as you can get. Notice that the candlestick that we received here today was an indecisive one. That's about as close to a doji as you're going to get right there, where you have a long upper shadow, a long lower shadow, and you kind of meet in the middle with both the opening price and the closing price. It just kind of means that we vacillated throughout the day and didn't really advance or decline in a major way. Oftentimes, those are indecision days, and they can sometimes come at levels where there could be a reversal. Now, we never know until the next day. All we know is that today there was a little bit of hesitation in continuing whatever move would have been occurring prior to this, which in this case has been bullish. You can see from a market forecast perspective, which is that indicator that you see pulled up down below, we continue to have a bullish posture on the S&P 500. Now, when I'm referring to a bullish posture, I'm referring to the intermediate term line, which is this green line down below here. And it's bullish whenever that line is either trending up between the 20 and 80 markers there, or just simply above the 80 zone there in the upper reversal zone. So notice that that green line is actually traveling down just a hair, but because it's above 80, we always consider that to be bullish. So you can also quickly spot that on the charts here, because if the background color of the chart is green on this particular setup, which is setup 4A for those of you that are following along at home. I know many of you that are my premium subscribers at Market Scholars have already gone through the charting tutorial. So remember, if you want to follow along when we're going through our analysis, just glance up here at the chart number. So whenever you're on chart 4A, you will see that the background color of the chart will be green if you do have a bullish posture using that intermediate term line, and that's where we stand right now. Not only that, but we also have a green moving average, which suggests that we have price above a rising moving average. So a couple of good things going there for the bulls. Now, one heads up about that is we are a little bit extended in that move. You'll recall that we went to a bullish posture back here on May 4th. And so, you know, we're a couple of weeks into this already. So it's not like we're catching a brand new bullish move here. It has been going on for a while. But at least we've caught a little bit of a bounce. I know there was some harrowing times earlier this year for a few folks that are out there that are just getting their feet wet with investing. So it is good to see some stabilization in the markets. Let's go ahead and take a look at our next chart, which is 4B, for those of you that are following along at home. And this is what I was mentioning in the intro. Take a look down here in the lower right-hand corner. my goodness, Russell 2000 making some waves here today. So let me right click on the Russell 2000. But before I right click, let me just first point out the fact that the Russell 2000 was up 0.55% today. Notice that the Dow Jones was down 0.22%, the S&P 500 was down 0.09%, and the NASDAQ was down 0.21%. Remember, Cisco reported earnings last night. Its stock was down significantly, so it probably pressured those NASDAQ technology-related stocks. But the Russell 2000, which focuses on small cap, usually domestic companies here in the United States, boy, breaking out in a big way. So let's go ahead and right-click on that chart and go to maximize sell. And you can see here what I'm referring to. We got this big candle that I mentioned in yesterday's presentation to break out to new all-time highs, and a continuation of that move here today. And it wasn't really that quiet of a day either. You know, a 0.55% move on an index that represents 2,000 stocks is actually a pretty substantial move. So good things brewing there with small caps. And that's generally perceived positively across the full market as well. Remember, the small cap market is oftentimes viewed as a leadership market because their prices can be pushed around a little bit easier than mega caps. And so usually when there's speculative risk on type of activity out there, you'll find movement within the Russell 2000 first. So this is actually a positive sign for the full market when we see Russell 2000 hitting new all-time highs like we have here recently. Of course, we also have that near-term line in the upper reversal zone again. Did have that red momentum line fall just a hair on the Russell 2000 because we didn't close near the highs of the session. But all in all, very positive performance out of the small caps. Let's do a little bit of 12 grid analysis now. Let me go over here to chart 4E. All right, for this, I'll kill that camera feed, and that way you guys can see all of my charts here, and nothing is blocking your view. And so as we're looking at this, basically looking to identify various trends or reversals or basically anything that catches my eye. And so today, a couple things that caught my eye. First of all, what I mentioned in the intro, which is everybody's keeping their eye on that 10-year Treasury yield. And here we are closing at 3.109 effectively. And so that is new multi-year highs there for Treasury yields. That'll take us all the way back to 2011. So basically 7-year highs at this point. Of course, that's causing reverberations across the rest of the landscape, including with U.S. government bonds. But notice, at least with the long bond rate here, and this is representing TLT on the chart, that we do have a bullish cluster or an oversold cluster, however you want to describe that. So if I were to right click on that chart, go to maximize sell, notice that TLT now has all three of your market forecast lines in the lower reversal zone. You've got the green, the blue, and the red down there, and that constitutes a oversold cluster signal. As a reminder, David actually taught an excellent class a couple of Fridays ago for his technical analysis class, for those of you that are premium members, where he kind of breaks down those cluster signals and how to utilize them. But one thing that I will point out about TLT is I found that in the past, whenever you do have an oversold signal on TLT, it's generally been a time where you have caught a little bit of a bounce after that. So, you know, I wouldn't necessarily hold it against you if you were doing things like selling put spreads on TLT after today's cluster was issued. Notice that the last two times we had clusters, at least oversold clusters, represented by these green dots on the chart here, those would have been excellent times to play the counter trend trade. After a sell-off, we get those clusters, and then we get a nice pop like we did back here in February. We had the same thing happen right here at the end of April. So could we be due for a little bit of a pop higher in the long bond itself and a pullback in rates? I think it's entirely possible. So that one has definitely been catching my eye. In fact, for those of you that are Premium Market Scholars subscribers, I did discuss REITs in my dividend growth investing class today. And remember, REITs are a different animal entirely. There's a lot of additional information you're going to need to know about REITs because they are viewed differently, they are valued differently, and they move differently than common stocks. So for those of you that are premium members, make sure you go check out that recording if you weren't able to attend that class live. Let's see what else is catching my eye. We do have gold actually popping in some of those oversold clusters as well. So let's take a peek at gold. This is just pulled up using the futures contract /GC, but for those of you that use ETFs, you're welcome to pull up GLD as well. But you'll notice that for 3 straight candles here, we have had those oversold clusters. Notice that we haven't really advanced that much further down, at least by the end of the day. We basically had 3 straight closes that were flat. So we have had some progressively lower lows within the intraday basis, but the closing prices have largely been flat for the last 3 days. You can see that the last time we had an oversold cluster on /GC was back here on May 2nd, and we did have a reversion to the mean move for the next couple of weeks out of there. So we might be gearing up for kind of a counter trend rally out of gold here at some point as well. Of course, in order to see that happen, you'd like to see the US dollar pull back. And that's been one of the really difficult things here recently. Notice that the UUP, which is the chart in the lower left-hand corner here, just keeps on rallying higher and higher and higher. As most of you are aware, most commodities are priced in US dollars, and so when the US dollar gets strong, typically commodity prices struggle. Of course, the exception to that has been crude oil prices here recently, which just kind of is dancing to its own beat at this point. So crude oil and treasuries are doing quite well. In fact, one of the charts I was looking at earlier today was ticker symbol CFR. This is a fairly unknown, sleepy banking company out of Texas. This is Cullen Frost Bankers. And this is a company that was in quite a bit of hot water a couple of years ago as oil prices were plunging, and people were really expecting them to cut their dividend. They never did. This is one of the few banks out there that did not cut their dividend, not even in the 2008-2009 crisis. They've continued to raise them throughout the years. Well, this chart has completely flip-flopped from where we were just a couple of years ago. And so let me go ahead and show you. If I go to, let's go to a 5-year chart here real quick. This is the time I was referring to where things were looking pretty bleak for Cullen Frost. They were falling off the map, but they've more than doubled since that time period. So this is a stock that the reason I'm bringing it up right now is because our conversation about rising treasuries and rising oil prices, treasury yields, I should say, rising treasury yields and oil prices. So the rising treasury yields, as many of you are aware, typically benefit financial institutions like banks, which Cullen Frost is. Rising oil prices typically benefit oil companies. Well, Cullen Frost isn't really an oil company per se, but it oftentimes trades a little bit more in alignment with oil prices than other banks simply because most of its major customers are oil companies down there in Texas. So anyway, keep your eye on that kind of unknown company. It's certainly been breaking out in a big way here recently. Let's take a look at a few other charts while we're at it. Let's go over to the foreign stock markets 12 grid. And here you can see we've got kind of a mixed bag between bullish and bearish postures. So as a reminder on these particular 12 grids right here, when you see the background color pink, that means that the intermediate term line on the market forecast is suggesting a bearish posture. When you have the background color green, it's suggesting a bullish posture. So as we look at this, you can see that Brazil continues to get beat up. In fact, kind of interesting to see that. We were actually reviewing a bearish trade on Brazil last night in my strategy lab class, which, boy, I've had 3 straight trades now that I've done after the market has closed, and all 3 of them have not gotten filled the next day. So, boy, I tell you, that's a pet peeve of mine. So as I was mentioning in the market forecast yesterday, we're looking at ways to resolve that issue. And one of the things that David and I have discussed, particularly for this market forecast video, or this market outlook video, I should say, that focuses on the market forecast tool, is to conduct them potentially in the trading day itself, or at least the trading portion of the market outlook video to be done within the trading day, and then maybe do some wrap-up analysis after the trading day is closed. What that would do for us is it would allow us to get our trade idea filled, as opposed to just crossing our fingers and hoping it gets filled the next day when trades can always bounce against you, like I've seen for my last 3 trade ideas. The last 2 on the market outlook video, because for those of you that followed it last night with KOL, that one did not get filled today because it gapped up to start the day. Of course, the day before that was Adidas, and then last night I won't let you know because not everybody's premium subscribers that's listening to this, but we took a trade last night in my strategy lab class, and that one did not get filled today either. So anyway, I'm kind of feeling a little bit burned by that right now. So what we may do in the future with this video is, for those of you that are premium subscribers to Market Scholars, we might have kind of a live class, a very small live class while the market is open to conduct the trades for this video and also manage previous trades for this video. And then we would do our traditional general market analysis after the market is closed for everybody that's not a premium subscriber. So be on the lookout for that. It's got a little bit of work to do before we can actually put it together, but we'll continue to kind of relay information as we learn more regarding that. As we're looking at these various foreign charts right here, other than Brazil and also South Africa over here in the lower right-hand corner really driving its way lower, the ones that are doing the best from a trending up perspective are the two that I've been mentioning here recently, which Canada and the United Kingdom. Of course, big wedding coming up here in the United Kingdom that the world will be setting their sights to. But other areas that are doing reasonably well, you can see Israel is starting to turn around. So notice that Israel had been in a downtrend. Let me right click on this. Let me go to maximize sell. Israel had been in a downtrend, but notice we got the first makings of a potential reversal taking place here. We had lower highs and lower lows up until this point. We then had this reversion move right here. We put in yet another lower high. So at that point, we made the assumption that we would continue in the downtrend. Well, of course, markets are going to do whatever they need to do. In this case, market pulled back, put in a new low right here, which was clearly higher than this low. So now we've got a lower high, yet a higher low. And of course, after that reversion to the mean type of a move, it popped right past the moving average, and now we actually put in a new high. Notice that the candle we were at today on Israel is above this prior high right here. So then we can effectively say that we now have higher highs and higher lows. In addition to that, we of course have this nice green line here on the market, or on the moving average, and what that signifies is price above the moving average itself, which is rising. And then of course the green background of this chart suggests that our intermediate posture using that market forecast tool is bullish at the current time. So keep your eye on Israel starting to make a reasonable move here. And then let's take a look at international comparison one grid. This is chart 4M for those of you that are following along at home. Over the last year, you can see that it's actually China that is leading the world higher. And this is a one-year basis. China's up about 22% if you're using FXI as your ticker. And remember, if you don't know what FXI is, just match up the color code that you see here with the color code up here on the top of the graph as well. On the downside is actually Mexico. Mexico has been really struggling, especially recently. We had a brief period of outperformance with Mexico, but it's really been one of the drastic underperformers here recently, and a lot of that could be back to the whole discussions about NAFTA. If we were to kind of zoom in to see what's been going on a little bit more recent basis, let's go to a 3-month chart on this, and you can see that it is the United Kingdom up here at the top in that purple line. Again, kind of match the color code up here. That's up about 5% over the last 3 months. On the downside, there's Brazil, really struggling. A lot of economies in South America are starting to struggle right now. Some of it is self-inflicted wounds with currencies and different things like that, but certainly Brazil has been an ugly story here of late. Let's now take a look here at the sector analysis. So let's go back over to the 12 grids, and let's go to chart 4G on this one. And this will tell us what's going on with sectors in the United States. Well, first thing that catches my eye is that it's the entire bottom row that is in pink, meaning that we have a bearish posture using the market forecast intermediate term line. And remember, the way that this 12 grid is structured is it's not random. I kind of put it together based off of kind of things like the business cycle and thought process of risk on, risk off type of a thing. So most of you are aware that that bottom rung right there is kind of your defensive risk off types of securities that are oftentimes interest rate sensitive. So when interest rates are breaking out to new multi-year highs like we saw today, not a surprise that a lot of these charts are struggling as well. So keep your eye on that story. But otherwise, you know, the S&P 500 continues to have that bullish posture, so most of the other risk-on sectors also have bullish postures. The one I want you to focus on right now is industrials. Notice that industrials does have that green background. Its intermediate line is at 71.97 and rising, and therefore has a bullish posture. Reason I'm pointing that one out specifically is because our trade idea here in just a little bit is going to come from that particular sector. Before we get to that, let's do a line comparison chart now on the sectors. And so that would be chart 4H. For those of you that grew up in rural parts of the country, you might think of 4-H as something different, as I do, but this is chart 4-H here. And so this is technology leading the way higher over the last year. Telecom, one of the laggards over the last year. If we advance to kind of see what's been going on more recently, since we did 3 months yesterday, let's kind of zoom in even a little bit further today. Let's take a look at 1 month and just see what's going on here on a 1 month basis. And you can see that the story of the month has been energy and oil prices. And it seems like David and I just kind of harp on that day after day after day in these videos. But hey, if the trend's still intact, it's worth pointing out. And right now, those energy stocks, they just don't seem to want to give up. Stocks like Halliburton and Schlumberger continue to rally higher as well. And they're really, you know, the interesting thing about it is they're so far ahead of the second place, which is financials. Financials are only up about 2.5% over the last month, whereas energy is up, you know, effectively 4 times that, or almost 4 times that, at about 9%. So really strong performers there in the oil patch themselves. And kind of heard an interesting thing from one of my students in my class earlier today that I'll pass along with you as well. Statoil changed its name and its ticker symbol. EQNR, something like that. So keep your eye on that if you're trading Statoil these days, which is that big European oil conglomerate type of a company. All right, let's see if there's anything else I wanted to bring your way. Of course, I do get requests from some folks that want to look at the VIX on a regular basis, and we did review it briefly there on the intermarket analysis 12 grid, but I'll bring this up too, just to appease those of you that want to look at the VIX every day. The VIX was basically flat today. There's not really anything I can report, but for those of you that want to see it, there it is. It's at 1343. All right, so let's now go to our chart 4A. This is back to typical market forecast type of a chart here, where we've got that market forecast indicator along with the market sentiment pulled up down below. And the chart that I wanted to pull up was Boeing. Now, many of you are aware that Boeing has gone on an incredible run over the last couple of years. In fact, some of you have been in my dividend investing classes in the past, and Boeing has been one of our picks a couple of years ago when its yield was close to 4%. Of course, today, its yield isn't anywhere close to that because the stock price has done so well. You know, of course, 3-year performance right here. This was the best performing stock in the entire Dow Jones Industrial Average last year. I mean, truly an epic performance out of Boeing. But like a lot of companies, after they go on such an epic run, they need to kind of burn off the fat a little bit. And that is what it kind of appears that Boeing has done here recently. You can see their 3-month performance has really been flat. It's been sideways as it's trying to burn off some of that fat. But today, it actually did have an outperforming day. Notice that it was up 0.93% today. Remember, the Dow Jones in which it resides was down, and the S&P 500 itself was flat. So this was a relative outperformer on a daily basis. You can see that the background color of our chart here is green, suggesting that it does still have a bullish posture. Of course, we've got that green moving average line, which suggests we got price above a rising moving average. And then you combine all that with the fact that you probably had a little bit of a hold or a bullish engulfing candle there today. That's generally perceived positively as well. So I thought we would do today is sell a put spread on Boeing. And so when we come over here to the option chain, I typically start my process by looking for a delta close to 30. And I'm usually looking for contracts that expire, let's call it 20 to 50 days until expiration. So I'm looking at the June monthly contracts here with 29 days until expiration. And so focusing on that 32 delta over there, which would lead us to the 335 strike price. That will be our sold strike. So I'm going to right click on that, go to sell, and then go to vertical. That pulls up our trade down below where we're selling the 335, we're buying the 330 put, and our credit that we'll receive, now again, this is after hours, so who knows what happens tomorrow. The way my luck has been this week, Boeing will probably gap up $10 per share, and we won't get filled on this one either. I'm crossing my fingers that that doesn't happen. But right now in the after hours here on Thursday evening, we do have a credit available of 118, but we won't know until tomorrow morning whether we can actually get filled at that price. However, we still want to know that it has a reasonable return on risk. So I'm going to click on confirm and send here just one time. And I'm going to show you that our max profit on this trade would be 118. Our max loss is 382. So if I were to get my calculator out and take 118 and divide it by 382, you can see that our return on risk is 30.9 effectively, 30.9% for being in a trade for 29 days. Typically, I'm shooting for 30% or more, so we're just barely over that hurdle, which I view as acceptable at the current prices. Now, you'll notice that the break-even price here is 333.82. So if I were to look at where that is on the chart, let's go over here and let's see. I'm just going to draw this line at 338, or I'm sorry, 333.82, 333.82, and I'm going to hit OK. And you'll notice that that line there would represent where our break even would be on this trade. So if you were to take a trade like this, what you're hoping for is for this stock to continue to drift higher and to stay above this blue line through expiration day here in about 29 days. So with that, let's go ahead and place that trade. And everything looks good there, so off she goes. See if we get filled on that tomorrow morning. All right, well, I want to thank you for joining me here yet again here this evening. It's been a fun week, without a doubt. A lot of interesting stories within the marketplace. Remember, if you get value out of the analysis of these market outlook videos each day, we would encourage you to go to Twitter and like the most recent market outlook video, which is typically pinned to the top of either David or I's Twitter feed, depending on who did the video for that particular day. As long as I get at least 100 likes on Twitter by tomorrow's close, I will plan on doing the video yet again tomorrow. Otherwise, maybe we'll see you next week. Have a great night, everybody. Best of success with your trades and your investments. Goodbye for now.